Hey folks, it's Vic Noble here with a weekly trade example for you for the week ending March the 16th of 2012. Hope you guys are doing good, had a good week. Pretty wild out there these days, but anyway, I guess it's always wild. Here's the daily chart of the British pound US dollar, and I'll show you just a beauty trade that's set up. It's one of our recurring forex patterns trades it sets up. If you guys haven't seen that course yet, check it out. I'll tell you something. Shirley Hudson, who co-authored it with me, yesterday alone, I'm recording this on the 16th, and on the 15th, yesterday, just taking recurring forex patterns trades, not London close, just those alone, averaged 110 pips within about maybe 2 hours at the most. In fact, I think it was even less than that. Just outstanding trading. I mean, she's a real ace at it, but you don't have to, you know, if you just pick one of these patterns, that's all you need to do. So have a look at that. Anyway, look at the support down here. You see that? Not only that, from this low to this high, it's a 50% retracement. Now, it came past this support a little bit here, but it never traded and held below it. And on the 4-hour chart, if you look at it, this level, this level here, let's just make note of what that number was. It was around 156. Well, the level just down here is 156.18. This 50% on the. So I've got that same level marked right here. That's what, now let's see how it was resistance over here, and it came down and touched it at that same place, at that 50% retracement from the daily chart, and started to head back up. But what you want to see is, how do I trade that? You know, what do you do when that happens? So here's that 156, well, 16, 18, whatever you want to call it, from the daily chart. Look at this. Price is doing what? It's going down, isn't it? What's the MACD doing? It's going up. This is positive divergence, and we call this qualified. The way that we teach it, and it comes back, and actually I'll show you something. From this low up to this high, it retraced, guess what, 79% right to here. Now, it was interesting when that happened. I'm going to show you how to get a really small risk trade. I mean, all this huge move in here, you only needed like 15 pips of risk. When this happened, this set up actually what's called a VIX trade right in here at as well. So I could have called it a VIX trade, but it's also a MACD positive divergence trade on a 15-minute chart. Okay, so if you're watching for these things, you'll find them. And if you're scattered around trying to find everything out there, you're not going to find anything. You've got to get focused on one thing. Price is going down, MACD's going up, and remember, this was a 79% retracement of that swing. I'll just show you again on the 1-hour chart of this, from this low up to this high. That was a 79% retracement, and that's where the divergence, look at all this support in here. That's where the divergence is happening on the 15-minute chart. See? So this is another qualified one. The way that we teach to buy it, the long is at 156.45. I had this trade myself, and I know Shirley had it. And when you're in these trades, when you learn how to read conditions in the market, like on this particular day, what happened is the stock market really started to roll, and everything was positive. The US dollar was dropping. So when that happens, you can learn how to hang on to these things for more profit. And where you want to look to get out of them is where you see resistance. And you know, like, just look at simple areas like here on the 1-hour chart. I mean, 157.20-ish. Well, from our entry down at 45 up to 20, there's over 80 pips in that move. And I'll tell you something. The risk on this trade, by buying it down here the way we show, was like 15 pips, a little bit less than that actually, but just call it 15 pips. Call it 20 pips. I mean, 80 pip profit is outstanding. So I mean, if you did one of those every week, just one, think of how your results would be. Anyway, it's all about using, you know, support resistance first and foremost on the higher time frames, and then drill down and find patterns at work that are reliable on the smaller time frames. That's your weekly trade example for you for the week ending. Oh, by the way, make sure you listen to the interview I had with some people from the Coach's Corner. Really inspiring. These are people who have come through the ranks, just like maybe many of you are that are learning and you're still not getting things going yet. They were in the same boat. We were all there at one time. And just listen to what they have to say about things. It's pretty cool. Anyway, have a listen to that if you're able to. And I'll see you at the end of next week with another weekly trade example. Thanks so much.